Thanks everybody for joining us today. This is Dwight Kay. I am the founder and managing member of Cove Capital Investments. Today we're going to be talking all about Delaware statutory trusts and 1031 exchanges, how these investments work, and we're going to give a little overview of Cove Capital and who we are, what we do. It's important to remember past performance does not guarantee future results. All real estate and DST investments carry the risk of a complete loss of invested capital, and that returns, cash flow, appreciation, and distributions are not guaranteed, could be lower than anticipated. Please read the entire private placement memorandum or PPM for a full discussion of the business plan and risk factors prior to investing. Securities offered through FNEX Capital, member FINRA SIPC. So jumping right into it today, we have our agenda, Cove Capital Investments. We're going to give an overview of Cove Capital, who we are, our portfolio, what we do as a company, how we work with our clients throughout the country. Number two, we're going to go over why debt-free 1031 exchange DST investments, why Cove Capital specifically, why we focus on debt-free offerings for our investors instead of mortgaged investments like many of the other DST sponsors. And we're going to talk about Delaware statutory trust exit strategies, and how those can potentially play out, as well as lastly, how to access Cove Capital's current DST 1031 exchange inventory. So here we have Cove Capital's portfolio overview. We have approximately 83 properties in the Cove portfolio. I believe it's more than that now, as we've got a few recent closings. That's about 1.9 million square feet of real estate that we own and manage on behalf of our investors, as well as ourselves, as we're invested in many of the offerings that we have available for our investors. My partner and I, that's about 53 different properties in the South and Texas, 5 properties in the Northeast, 16 in the Midwest, and 9 in the West. So our portfolio, we've been, at a very fast pace acquiring properties on behalf of our investors. We purchase industrial, multifamily, net leases, retail, shopping centers, as well as office. We're looking at office and shopping centers right now, considering the distress that's out there with so many owners and operators that took on large balloon mortgages and purchased properties 5, 6, 7, 8, 10 years ago, et cetera. And now they're looking at a very different landscape to sell those properties into. So we're very focused on the contrarian side of things, which A, is why we're debt free. We realize that not many investors in the real estate space are debt free, or professional investors or sponsors are debt free. We believe it's a prudent thing to do, especially in today's day and age. And then number two, we're not necessarily wanting to buy the asset classes that everybody else wants to buy. Industrial, multifamily, we believe in those asset classes. They've got a lot of potential for growth, but they're expensive even today. Even in today's environment, with the rising rate environment, pricing really still is very, very high on those types of asset classes. So we like to buy areas that there is distress, where we can buy at what we believe a very value-oriented basis. So we're excited about the future, and probably that's because our current portfolio, out of 2 million square feet, I think we have 2 properties with small, modest loans on them. Everything else we own free and clear. So we don't have the situations and the impending maturities and properties that have loans coming due, et cetera, like many of the other DST sponsor companies, as well as professional institutional real estate investment companies that are handing back the keys to their properties to their lenders. And so that's number one, is A, we're largely debt free. And then B, we're looking for opportunities for our investors as well as for ourselves. So about 83 properties in the Cove Capital portfolio, just under 2 million square feet. Here's our tenant roster. In that portfolio, we own a number, a dozen plus, maybe close to 20 FedEx distribution facilities. That could be FedEx Express, FedEx Freight, FedEx Ground. We own an Amazon, as well as a large amount of what we like to call recessionary resistant retailers, which also turned out to be essential businesses that stayed open and paying rent during the pandemic. So we own a number of Walgreens, CVS pharmacies, Family Dollars, Dollar General, Advanced Auto Parts, Tractor Supply Company stores, DaVitas, Fresenius's, etc. So, our portfolio, we basically built it to be defensive for, like I said, for our 1031 exchange and DST investors, as well as for ourselves as we're invested in these various offerings as well personally. So quick overview of the Cove team. So our team, we have a fully integrated real estate company here at Cove Capital. We have our acquisitions department, asset management department, accounting, property analysis, in-house counsel, paralegals. We have investor relations, our marketing team, as well as capital markets. So A to Z, Cove Capital, we're fully integrated to take one of these offerings and one of these properties from acquisition to disposition on behalf of our investors, which we're really proud about. So this team, here's a handful of the team members that we have. We have our CFO, general counsel, senior VP of operations, VPs of real estate, and a number of other team members at Cove Capital that make these offerings happen. I think we're on offering number 75 at Cove Capital, somewhere around there. And each property, that goes into an offering, there's a lot of work that gets done on it. And so we have a very talented group of people that are focused on the, underwriting and analysis of the property, the acquisition of the property, and then from there, the asset management of the property. And then lastly, the disposition when we sell a property on behalf of our investors. And then on top of that, just the whole investor relations and accounting function that goes A to Z for our investors in that whole life cycle of an offering. So the Cove Capital team, we're super proud of. We're headquartered out of Torrance, California. Feel free, come out and visit us. We'd love to host you for the day and walk you through our teams and various departments, etc. So this next slide is something that is funny because it seems like it would be obvious, right, to even professional investors, why owning something yourself instead of owning it with borrowed funds from a lender would make sense. But a lot of people, especially in the real estate world, people love debt, and debt can be a potentially good thing. You can have higher potential returns, higher potential appreciation, higher potential cash flow if you have interest rates that are low enough and you have a positive arbitrage, which today is not the case with rates being higher than they were 24 months ago even. So but at Cove Capital, we're incredibly risk averse, and so we all know that real estate and real estate investing has risks. You can lose money investing in real estate. Property values can go up, property values can go down, and so one of the ways that we can mitigate risk on behalf of our investors as well as ourselves as we invest in these properties is we can not use a loan on the acquisition of a property. So we can be debt free. And so when you're investing in a debt-free DST investment through Cove Capital, you don't have any refinancing risk. There's a lot of DSTs from other sponsors that were put out in 2012, 2013, 2024, 2025. And the values of the properties have been hit hard by interest rates rising, and the loans are coming due. You've got loans coming due that were 10-year balloon maturity loans. And so as those loans come due, the sponsor either has to sell that building, and they might not get the proceeds that they were hoping for, or they have to spring into an LLC and refinance. So which has potential tax risk for DST investors because of the 7 deadly sins with DSTs. And so at Cove Capital, being that we do debt-free DSTs, we have no refinancing risk. So if you're an investor that wants to be still investing in real estate, although real estate is never guaranteed and it's considered a risky asset because there's no guarantees with it. If you want to lower your risk with the potential and not have that refinance risk, you can go into a debt-free DST. Number 2, flexibility to hold through any potential market downturns, credit crunches, recessions, or depressions. It's funny, I've been investing in DST since 2008, started working with them before that, and even before that, I was in commercial real estate, working with 1031 investors and apartment and net lease investors. And essentially, that flexibility to hold through potential market downturns is a key component to what I've kind of learned in that my experience in real estate. I started investing in DSTs in 2008. Since then, I've purchased over, I believe it's 60 different DST investments, and that's from many different real estate sponsors, DST sponsors in the space. So not just the Cove Capital offerings, which obviously as the founder of Cove Capital, I'm invested in many of these offerings, but also other DST sponsors that we've worked with over the years at our sister company. And so I've seen what works and what doesn't work. And so at Cove Capital, we're trying to design programs that we believe have flexibility to hold through these downturns. And it's funny now we're seeing with interest rates rising, we're seeing sponsors that are going out on a limb and they're trying to get a lower interest rate to make their deal pencil and get a higher projected cash flow to investors. And what are they doing? They're taking lower loan terms. So they're taking 5 and 7 year loans, which increases the risk of that investment. So, a typical commercial mortgage will have a 10-year balloon maturity, which alone, 10 years goes quickly. But when you half that and do a 5-year loan, you're really asking for, some risk that you might be potentially compensated with a little bit higher cash flow, but we just don't think it's worth it. And so that flexibility to hold through whatever the future throws at you when you're in a debt-free DST investment is something that a lot of investors are appreciating that work with us here at Cove Capital. Number 3, no cross-collateralized loan risk that's found in certain leveraged DST investments. Number 4, no cash flow sweep risk is found in certain DST properties with debt. I've seen DST sponsors that had loans on their properties and something happened at the property level and the lender has the ability to sweep all excess cash flow. So debt service is still being paid, but maybe there's a credit tenant that had a downgrade in their rating with their ratings agencies, or occupancy levels dropped. There was a tenant that moved out or something along those lines. That allows the lender oftentimes to sweep all excess cash flow. And that's not something that an investor investing in DSTs is really aware of a lot of the times. And so these loan documents on these offerings out there with debt, you've got to read them, you've got to understand what's going on. And if you're not comfortable with the cash flow sweep risk as found in most DSTs with debt, then you should be considering debt-free DSTs as an alternative, because there's no lender, there's no cash flow sweep risk with a debt-free DST. This next one's really interesting in today's day and age, in that oftentimes an all-cash debt-free DST investment can have a higher projected cash flow than leveraged DST investments due to there being no monthly debt service that needs to be paid to a lender. And we're seeing that really play out in today's higher interest rate environment at Cove Capital, where our projected cash flows on our debt-free properties are oftentimes higher than another DST sponsor's leverage deal, where that might not have been the case, a year or 2 years ago, because there's positive arbitrage when you're borrowing at an interest rate that's a lower interest rate than your acquisition cap rate. And that positive arbitrage, people love that because it can potentially increase your cash flows on the offering. Well, in today's day and age, where the sponsor might be purchasing at a 5% cap rate, but then they're borrowing at a 6% interest rate, that's negative arbitrage. And so they're getting an even lower cash flow, where at Cove Capital with our debt-free DSTs, we're seeing that our potential cash flow is at a higher rate oftentimes than those sponsors that have debt on them. So very interesting how times have changed. Debt-free DSTs allow investors to protect themselves from the financial catastrophe of a complete loss of their principal due to a lender foreclosure. I've seen DST sponsors be foreclosed on their DST properties because they had a loan and something happened. There was a tenant bankruptcy, or there was a restructuring, reorganization, and or the tenant just didn't renew a lease, and therefore the lender foreclosed on the property, or the sponsor had to fire sale the asset and sell it before it was time, and end up giving back investors less than their invested capital. And that is a risk of real estate, but with the leveraged DSTs, you're really increasing your risk on these offerings. You know, you have to be comfortable if you're investing in a leveraged DST or any type of leveraged real estate, you could lose your entire principal amount invested to a lender foreclosure. That's why personally for myself, in my portfolio of 60 plus DSTs, I think, I don't know, well over half are debt-free DST investments because I want to protect myself, my family from that complete financial loss of a lender foreclosure. Next, a no balloon mortgage maturity, which is typically found in most leveraged DST properties. That balloon mortgage is a hard maturity date. If you don't sell the property by then or pay back the loan or refinance, well, then the lender will seek to take back that property through a foreclosure or some other mechanism. So that balloon mortgage maturity is something to really keep an eye on. You know, I remember back in 2008, one of the sponsors was doing net lease DSTs with 5-year loans on them. And that 5 years went really quickly. And one of the properties actually almost went into foreclosure. They were able to figure it out and be able to sell the property, work it out with the lender. But, we're seeing now, like I said earlier, more and more DST offerings that have 5-year mortgages or 7-year mortgages. So you're really increasing your risk if you open yourself up to that type of exposure to a balloon mortgage maturity that's just in 5 years. So, or 7 years, and even a 10-year mortgage maturity. You know, there's a lot of DST offerings that were put out in 2012, 2013 that 10 years has gone by, and now they're really kind of in a pickle. And so, especially with valuation on a lot of asset classes coming way down, you've really got to be cognizant of those risk factors. And if you want to even take on that risk factor to begin with, and if you don't, then being in a debt-free DST with no balloon mortgage maturities may potentially make sense for you. And then lastly, no lender prepayment penalties, defeasance costs, or yield maintenance fees found in most leveraged DSTs. So that's another reason for debt-free DSTs. So at Cove, we have a number of potential exit strategies. Because we don't have a lender, we're not beholden to any one exit strategy. So I'm going to briefly go through these. 1, individual asset sales to 1031 exchange investors. Number 2, individual asset sales to REITs, family offices, investment funds, and other professional investors, which at Cove Capital, we have gone full cycle with the number 1 and number 2 strategy already. So we've borne those out. Number 3, portfolio sales of assets. That's definitely something that we could do. We've got probably about 600 or 700 million of properties in the Cove portfolio, so could potentially look like a very attractive acquisition for a large institutional investor wanting to do a portfolio purchase of our assets. That's definitely an exit strategy that we have on the table, and we've had conversations like that. Next is the 721 UPREIT roll-up. We're actually right now putting together our 721 UPREIT vehicle to give that potential option to investors. So we have that. And then we also have, lastly, hold for long-term income and appreciation potential. If we're in a situation where a property is doing, very well and we like the asset and, we're confident in the future prospects and potentials of the asset, we very well may want to just continue to hold the asset. But if we were a leveraged DST sponsor, like many of the other sponsors, in that 5 years, 7 years, or 10 years after purchasing the property, the loan's going to come due and we're probably going to have to sell it. And that's kind of what we see time and time again, where at Cove Capital, we have options, we have flexibility, we have many different exit strategies that we can choose from, and hopefully look at these exit strategies as to which ones make the most sense for our potential investors. And again, we are investors in these offerings as well. So being debt-free, we really have the world of exit strategies at our disposal. So, and then lastly, before we wrap it up, how does an investor access Cove Capital's current DST 1031 exchange inventory? First off, register for free at www.covecapitalinvestments.com. That's our online portal. You'll be able to register there, sign up. You're going to receive free access to Cove Capital's inventory of DST 1031 exchange offerings. Right now we have, I'd say, 7 or 8 different offerings available for our 1031 exchange investors. They're all debt free, and we have a number of industrial properties. We have essential business net lease assets. So, a number of different offerings all over the country too. We're typically, as you saw the map earlier of our portfolio, we're looking at assets all over the country, looking for, tenants that we believe can withstand the test of time. No guarantees, and past performance doesn't guarantee future results, but looking for tenants that we feel comfortable with. Oftentimes they'll be investment grade tenants. Looking for areas of the country that we believe have potential for growth, and or that particular tenant's business model will potentially continue to thrive in that market. So if you'd like to see those different offerings that we have available, you just register at www.covecapitalinvestments.com. You'll also receive a free educational book on Delaware statutory trust investments, and you'll be able to attend further educational webinars on 1031 exchanges and DST investments. So with that, I just want to say thanks everybody for joining us today. Appreciate you taking your time. Again, visit us online at covecapitalinvestments.com, or give us a call or shoot us an email here, info@covecapitalinvestments.com. We'd love to walk you through potential pros, potential cons of DSTs and real estate. We'll get you, if you're an accredited investor, we can provide you with the private placement memorandum, the PPM, that details the business plan as well as the risk factors of each of the Cove offerings, and we'll walk you through those. So thanks again, everybody. Have a wonderful rest of your day.